you guys doing? Hope you're doing fine. Hope you're doing wonderful. I hope you're discoing. I hope nothing but hope for everybody. Oh, disco deliver me, almighty disco. Oh, take me to the promised land, oh disco. How you guys doing? I hope you're doing fine. I hope you're doing wonderful. This is a gold technical analysis update, a fast video to start with the DXY, the updated. Even though I like my stock charts, this is my trading view. As I said yesterday, there will be a fast move. We settled at 93, almost 93.30, which is really a fast move. We can do it this way. We can think of measured move, a fast measured move of this. I think it's a fourth wave, a minute, fourth wave, and at least 1-to-1 measured move is 93.82. And I think this is not a radical target for a volatility to hit 94.60, which is the price memory of this one here. Capiche? So remember that. Measured move, 162 would be this price memory right here. Okay? Beautiful. And I think it's going to be fast. So another dollar something, and it will create volatility, that's for sure. And here is my old assumption in a DXY, as I stated many times. This is the downtrend, the major one, the little bullish wedges, this one and this one. And then now we had a 1, 2, 3 reversal, and now the settlement is right here. I think, as I just said earlier, a minimum target 1-to-1 is 93.82, but I don't think it will be terminated here. I think it will go fast to 94.60. In this assumption, I think the stochastic is going to be embedded very soon, which means the trend is in, no pullback, only going forward if history repeat itself. Okay, so this is the stochastic. See, this is what they call embedded, which is the red line and the blue line over 80 for a couple of days. This is definitely embedded. This gives momentum. This never happened here, like this one, here or here or here. It happened here and didn't last for long. And when it happened here, it gave us this move. So 94. A 94, okay, 94.60 is gamma, which is the older price memory. We might retrace after that, and the stochastic will go down a little bit, then rally up. See, the higher it stays in high reading for the stochastic, is the more likely the buyers will come back in once it goes below 80. Do remember that, please. The higher it goes over 80, the higher the number, the more likely that the buyers will come back in. Good deal. So this is the DXY. Let's look at the gold technical analysis. So what's new today? We hit this older price memory right here, almost, with high volume right here, higher than yesterday. Even that's why I like my stock charts. And what happened today in particular, we almost have a bearish crossover below the zero line, which is very strong sometimes if history repeats itself. See, once we had it here, it gave us a flush from 1950 to 1680. See, this came with the bearish crossover of the MACD. Okay, we might go all the way to 1590 something. That's what I'm thinking. That's what I'm assuming. before any bounce. I think so. I might be wrong. I've been wrong so many times. So please, this is not a recommendation to buy or sell. Please, I'm just giving an educational presentation. That's all. Okay. So I think 1590 is game, and it's going to be fast with the dollar movement. Okay, and with the help of the bearish MACD. This is GLD, and GLD already in the MACD bearish crossover, and when it happened here, rest is history. When it happened here, the rest is history. When it happened here, it marked the top. See, right here, it marked the top. So as I stated, let's look at the volume here for the GLD, the gold ETF. Good deal. It's an okay volume. It's not severe, but nevertheless, the price retracement is not good with this gap right here. This is what I'm fearful of usually. It gives me always, especially in the daily time frame, always good signals. Okay, so I talked about the USD, I talked about gold. Let's talk about GDX. A lot of people like this one, and it's outperforming gold these days. Yet, I think some institutional investors are trying the same way, trying to protect the price and defend it, but I don't think they can. They sold GDX back in November 3rd, right here. But gold rallied. The GDX at that time was lagging gold. Gold rallied, and they gapped up all the way to catch up with gold. And after that, GDX and gold both went down. So GDX usually plays catch up. It played catch up here to the upside. I think it will play catch up to the downside. Once we clear 1680 for gold, we will go below 3064. Okay? And based on this bearish MACD crossover, it's game. So, in conclusion, according to my Elliott wave assumption in the DXY, we're going through a flat, extended flat, 335.95. It's I'm thinking 94.80. So 95 is almost 94.60. I forgot. Let's see, which one is it? Crap. I like my chart.com. My God, why would embarrass me? Okay. Anywho, so I think 95, 94 it will be fast. And after that, the stochastic will take it easy, go down, and the dibble buyers will come back in. I'm expecting even in the weekly time frame something like that. You would have a very strong stochastic that will stay overbought for sometimes. Look at the higher the higher that stochastic reading in the weekly time frame for the dollar, the more likely you will have dibble buyers once this thing go down, and will stay up for some times. Last time we have a number like that. It was 21st of May, and the dibble buyers came back in and took the price all the way to 104. So the dibble buyers will stay in for the dollar as far as the weekly time frame. So in conclusion, I am very bullish on the dollar, very bearish on gold and GDX and all the precious metals for the time being. And I stated before, only focus on the dollar and bonds. Forget about gold. Gold is not an independent asset. Focus on bonds and dollar if you want to trade gold. Please like if you like, subscribe and share, and remember that disco is for Ava.